we're here to discuss the NCBA article that Don has written, Climbing the Continuous Wall of Worry. In this article, Don states out the variety and the large number of negative news factors that have approached the beef market and how that's actually impacted the market, and the reality that this beef market has continued to climb. So Don, I don't know if you want to kick us off here with any high level ideas around the article and what the emphasis is. And then maybe we can touch through how producers could use some of this information.
So the timing of writing this article was within that first 2 weeks of the U.S.-Israeli invasion in Iran. Clearly, the immediate spike in gasoline prices that in turn caused huge shockwaves through the commodity sector totally, but specifically to the cattle market. That would an instant dollar a gallon rise in gasoline prices curb or kill beef demand? My point on that is, if you take the number of challenges that this market, is now fully 6 years old. We've had huge headwinds thrown at this deal. We've had, no particular order, but we've had the president's Argentine intervention and an effort to increase imports. We've had the whole issue with Mexican screwworm. And it's just one thing after, and the whole Ukraine-Russia disruption has been going on through the majority of this time. And as every one of those stories emerged or materialized, it would cause pause or hesitation in the market. And within days, this rally was back on track and continuing to charge forward. So my core thoughts on the article is, I thought the impact of the dollar a gallon increase in gasoline prices could very likely be the biggest challenge this rally has faced. But at the very same time, I don't think it would have had the emphasis to stop the rally or kill it. That's the real gist of what the article is about.
One of the things in the article talked about, we don't know the duration of this conflict in Iran. And just like in other commodity markets, we know that they're going to go up and going to go down. The timing is the critical piece that's very difficult to understand. With that understanding, what possible steps could a producer take, or what understanding or focus should they have operationally, knowing that this could last for 2 months or 12 months?
It tried to draw this into some kind of conclusion, and certainly from, both our sides of the business, that what is the message to customers, and how do they position themselves in a risk environment? Like, the leverage in this market currently is like nothing I have ever seen in all the years I've been doing it. So it's absolutely imperative to have some kind of risk protection in place. I think the timeline and the changes over the last year or two in the insurance products really make them a good product for this environment. I still think, because of the trend of the market being higher, I still prefer some kind of option strategy or some kind of a soft hedge instead of hard conventional futures positions. But absolutely, just can't emphasize enough to customers in this environment, do something.
Yeah, I spend my days having those conversations. And I think the overwhelming question is, how do you manage margin on these placements from the past month that are unmarginable cattle today.
Yeah.
And insurance has the ability, and auctions do as well, but to shift the emphasis from margin lock opportunities that simply don't exist on some of these freshly placed cattle today towards how can we smooth out the volatility,
Yep.
and what kind of plan can I lockstep run through this period of time, and do a 12 or 18-month look back and evaluate how that worked. That's where I see the opportunity for success in risk management, because if you pay $3,000 for a replacement steer today, you're pushing your break even up closer to 4,000 than not.
Yeah.
We're looking at 240 futures out in December. Those cattle don't margin.
Yeah.
So I'd like your take on this, Don, but I've actually posed to my customers an overarching kind of enterprise risk management idea for 2026 is construct a plan that allows you to keep at a minimum half of what you made last year. And with how cattle are placed and simply what they cost to be owned, I think that's a viable plan. Maybe isn't the most flattering or exciting, but it is possible.
A lot of the conversations that I've been involved in for 26 years today is they were all scared to death of the price levels we were at through late 24, all of 25. They all had risk protection in place, whatever level or type it was. And so all that margin money disappear. So now they're frustrated. And every time that happens, just when the hesitation or the frustration level is the highest, that I don't want to burn all that money again this year, the very time it needs to be in place the most.
Yep. Yep, you could feel it. The psychology around risk management is real. And it's tough to navigate, because you construct a plan or you think I'll use these tools in this product, and then you look at the reality of what your break evens are in a feedlot, or the price opportunity you think you see as a cow calf producer. It makes it challenging to execute.
What the point that you were bringing up, and to capture half of last year, and you said it all. First cost in this market are so high. If you look at the feeding margins that these guys have had for the last 6 months, it's really been either side of a wash. And it's always surprised me all the time I've worked with feed yards, but how the lengths they will go to keep that yard operational, keep employees on, hired. So with this kind of where I'm trying to go with this is it's very likely a time work at hitting singles, maybe a double, but don't think this is the market environment that you're going to hit it out of the park, because we're past that point in this cost cycle.
Yep. I agree. If you were looking for a swing trade in cattle, I think it's already happened.
Yeah, it's already happened.
And now we're in the equity hold it together phase
Yep.
of the cycle.
Yep.
All right. Well, Don, thank you very much. Great article, great insights for everyone to check out. And I guess we'll wrap it up here.
Thanks a lot, Landon. Good talking with you.